the explorers have really lagged, and some of them dramatically, and which is kind of normal in these commodity cycles. The bigger money that comes into the sector, they can only invest in certain in companies that have a certain market cap. They'll invest in the companies that are better known, the blue chips, the better developers, that kind of thing. So to see those names move first, I think, is normal in the commodity cycle. And I also understand that with regards to the explorers, like, people are like waiting for news on the explorers. The better names are out there drilling. They're trying to find something, and some of these companies that these explorers that have found something have been rewarded. Like,
Hey guys, Terry Poppin is back on the show. Terry, what is your latest take on the uranium market at the moment?
well, I mean, what a ride, basically. I think that the announcement that we received this week of the Russian, where the Senate actually ratified the Russian suspension agreement. We're waiting for Biden to sign it. The next morning after it was announced, the markets ran. The uranium names went up
Quite a
significantly,
bit, yeah.
and then they sold off at the end of the day. Yesterday was a good day. Today was another good day in the markets. But I mean, the different impediments to seeing this sector really take off are just falling one by one. And what I mean by that is, for those that have been in the trade long enough to remember, like the Section 32 Russian suspension agreement, um, a few years back, where there was a lot of uncertainty related to, can the U.S. utilities obtain material from Russia or Russia-friendly countries, and that put some uncertainty in the markets. And then we had, you know, Russia invaded Ukraine, and then the conflict with Israel and Palestine, and then Iran getting involved, and now where the Russian material, the Russian ban is in effect. All of the pieces that were kind of creating uncertainty in the market have been taken away. And I think that now that there's clarity, I think that the utilities that were waiting on that clarity will now begin to enter into that contracting cycle that we saw a bit of last year. But I think that now we're going to see quite a bit more of it because they have clarity now. And with all that uncertainty and those events that I've been describing, there's been a lot of volatility, and we saw volatility this just this week. And we saw a very impressive run up in the price of uranium in 2023, especially in the last quarter of 2023. That continued in the first month of 2024, where the price of uranium reached $106 a pound, the spot price of uranium, and then it fell back down fairly dramatically to about $84 a pound very, very quickly. And
Typical
that left
uranium.
what's that?
That's it, typical uranium.
Yeah. And so that left everybody just scratching their heads, go, what's going on here? Finally, we're seeing, the price of uranium do what everyone was expecting it to do. And then it gets shot down quite dramatically and very quickly in the space of a day or two. And that just threw a cold shower on the sector again. So it's been, for me, anyways, I've been in this sector since 2017. It's been quite a roller coaster ride of volatility. But my take on the sector is it's basically the same thing I've been saying, and people are going to be tired of hearing me say it. But it's just the spring is now, I think, coiled to its max. There's kind of an urgency now in terms of really determining how are the Western friendly utilities going to source their uranium fuel for the years to come? There's a large deficit, as we know, if in the years to come. There's a lot of production that needs to come online. There's mines that aren't even permitted, aren't even built yet, that are needed by 2030 that are not there. So I think that we're going to see finally, barring another maybe financial event or accident, I think finally we're going to see more money now really starting to enter the sector.
Yeah, I mean, people often cite the accident, the nuclear accident thing, and I mean, let me know if you're kind of this belief as well. But the way I see it is that even if an accident does occur, you might see somewhat of a short term to midterm bear market in the uranium market. But I think we rebound a lot faster than we did with Fukushima, given the necessity of energy in this energy shortage environment that we have.
It's going to depend on what, like, let me rephrase that. It would de it depends on what what we're talking about. If it's like a minor event at one facility, which we saw a few years ago in China. There was talk about in the summer about
Yep.
radiation leak and all that kind of stuff. Then it's going to be very temporary and very minor. If it's a major event, my biggest, I think, bear case scenario is if there was a major flaw with the Chinese design that they're building. There's a lot of units that are built. If they find a major flaw in that design, and they have to put that build out on pause or on hold, I think that would have a major effect on the sector.
Gotcha. So you mentioned the Russian uranium ban coming up. It's passing the Senate. It's looking to get signed by Biden sometime next week. Now, and we did see some movement in the uranium space as well. Has has this kind of already been priced in now, whether or not Biden signed, which he most likely will? But has the move already been priced in at this very moment? Do you think, or do you think that we still have more upside to come because of this ban?
Well, I think that we saw the spot price of uranium jump up right away,
Mhm.
and we also saw uh, money come into the sector right away. And I think the one of the major players related to this is the Sprott Physical Uranium Trust. And so where Sput, let's call it Sput for the past 2 years, let's say since 2022, 2023, has been trading at a discount to NAV like almost 95% of the time, which means that it can't activate the at the market that they have and issue new shares, raise money. And that's been an impediment to them. Like it's been holding the fund back in a sense because they can't be raising money and they're not buying uranium. So that kind of is putting like a pause on the purchase of uranium on the spot market by Sput. Since let's say the end of Q4 2023 and in Q1 2024, it's been trading closer to NAV, which means that on certain days it's able to activate the ATM, take in money, and then it turns around and buys uranium on the spot market, which we've seen them do in the past 2 years. We've seen them, not 2 years, excuse me, 2 weeks. We've seen them purchase uranium, 100 pounds, 100,000 pounds here, 100,000 pounds there. And when they are close to NAV and when they enter into a premium to NAV, I've noticed that what happens is the sellers, people that have uranium, they'll actually kind of anticipate the fact that Sput's going to come into the market, and they raise their ask price. So I think that uh, because more money's coming into sput, because this ban now, we know we have clarity on that, more money is coming into the sector. So I think that the price may have, some people may have baked the price, that into the price, but I think that money is going to continue coming into the sector. And I think that as things become even clearer, I think that the price of uranium, it will continue to rise. So I think it has a little ways to go still.
Yeah. So what type of companies benefit most out of this type of news?
Well, we've seen, let's say this week, for example, we've seen with this Russian ban, we've seen any company that could produce fairly quickly in the US, we've seen their share prices respond very, very well.
Yep. Energy
Like
fuels.
Encore Energy, UEC, Energy Fuels, URG, other names similar have responded very well, because now I imagine that the generalist investor or people that are coming into the sector realize now that utilities will need to sign more contracts now with U.S. producers and U.S. developers and Western-friendly developers and producers. So we've also seen the Camecos, the Paladins, the Bannermans, different names of that nature do well since the Russian ban has been passed.
Yeah, speaking of Cameco, Cameco had their big Q1 call earlier this week, yesterday actually, at the time of this recording. What were some of the big takeaways that you saw from that call?
Yeah, it was actually Tuesday, 2 days ago. Well, the big takeaway I've found, and what I've noticed is that I've been listening to their quarterly conference calls, and I've actually called in a couple times and asked some questions, but I've noticed that the tone of their calls has changed clearly. I'm not going to use the word dramatically, but clearly there's been a clear change in their conference call since Q4 of 2023, when the price of uranium went up quite a bit, and then when it hit $106. So when they did their Q4 2023 conference call in February of 2024, and the last one that they just had on Tuesday, now all of a sudden, and someone asked Grant Isaac the question directly, can you give us color on the contracting volumes? And Grant Isaac responded, oh, we've moved away from talking about that. We know what the contracting market looks like. We don't need to comment on something to that effect. And to me, I just find that, they've been purposefully vague. And I find that to me, it almost sounds like they're trying to, or it feels like they're trying to throw a cold shower on the market, not reveal their hand, show their cards too much, because, let's remember that, they're oversold. So they need to source material outside of what they can produce. They have various ways of doing that. They could, ways that I don't know of, but and not only is Cameco in that situation, Kazatomprom is also in a situation where they'll need to source material probably outside of their production. So the two largest producers in the world, need to obtain material somehow, and Orano is in the same situation. So the three largest producers need to source material. Where are they going to get it? Well, one of the places where they can get the material is in the spot market. And I don't think it's a conspiracy theory here, but I believe that they're kind of purposefully trying to subdue this, because the more they pay for the uranium that they need to purchase, if they do purchase material, then the less money they'll be making. They could actually be losing money on the pounds that they need to purchase, right? Because they may have contracted that material, selling it at, let's say, a realized price of $60. And if they need to be paying, if they're paying, $85 or $100 in the market for that material, then they're losing money. So it's like some people have described it as John Champaglia has used the term. It's kind of like there's a buyer's strike, and that's kind of my what I'm taking away from the conference call is the actual tone. There's been other conference calls in the past, especially in 2022 when they announced that they were restarting MacArthur River, and other conference calls when they've been really saying, we've never seen this level of contracting before, this interest, this blah, and now it's like they're really that's the sense that I'm getting. They're trying to kind of tone it down a little bit. And to me, it's like they're throwing a cold shower on the sector.
Mm. Yeah, I mean, it sounds like their incentives actually fall in place to, like you said, throw a cold shower on the sector because they are also buyers of uranium as well. So
Yeah.
makes sense there. We've had a lot of ups and downs in this market over the course of, in your case, 8 years now since 2016. Uh, Is where we are now, does that has that kind of met your expectations, exceeded your expectations, or kind of lived below your expectations, considering when you got in? When you got in back in 2016, did you really first see yourself holding on to these uranium equities up until now? And if so, like, are these kind of the gains that you were envisioning, or not, or has the thesis changed in such a way that you're even more bullish than you were back then?
Yeah, no, it has not unfolded to my expectations in the sense that when I first got in, I used to tell people I think it's going to be a 3 to 5 year play. So I was hoping to get the payout in that time frame. So in that sense, no, it has not met my expectations. But on the other hand, uh, for the second part of your question, yes, I'm even more bullish now than I've ever been. It's really taught me to be patient, and I think of a lot of the guru investor lessons where they take about the hardest thing to do is just to do nothing, and all those nice catchy investor phrases and all that kind of, find something where you're convinced, and you just hold on, and the markets are a way of transferring wealth from the impatient to the patient. All those things really come
Right.
to mind when I'm thinking of my uranium investments here. But so in terms of the time frame, no, it hasn't met the expectations. But in terms of the underlying thesis, I think that it's going to be a better bull market than what I thought, and I think it's going to last way longer than what I initially envisioned, and I think it's going to be deeper, and it's just gotten way, 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 way better. And I've spoken about this often. Like the first 3 years, like there was no information, none. It was John Quakes, Trader Ferg, Justin Hune, myself. There was a group called Follow the Money Investor Group that started doing some videos at one point in time. There were it's just a few groups of people that were involved and doing research and stuff like that. And there was no talk about, you were hearing word about small modular reactors, not really knowing what that was going to mean. Uh, there was no commitment by, like the 30 nations to triple their nuclear capacity by 2050. None of that. Like, there's so many things that have developed to improve the thesis in that period of time. It's just mind-boggling. And I don't pretend to think that all of what is being said is going to occur, but if just a certain amount of it or percentage of it is true, like for example, in the past 2 weeks, like it's like the big story now is these AI centers, artificial intelligence centers, and these data centers that are going to be consuming huge amounts of electricity. You weren't hearing anything about that in 2016, 2017, even up to 2022, 23. That just started coming out in the past, let's call it 6 months.
Yeah, there
Uh,
you. I mean, this is what you have here. This is from the Cameco conference call. So they had this slide up, and they're basically comparing the electricity demand between 2022 and 2026 with regards to these data centers. So you've got the traditional data centers here in green, the cryptocurrencies here in blue, and then in light blue you have the AI data centers. And the upshot of it is that within 4 years' time, you can expect to almost double the demand from these data centers from 2022
Yeah.
to 2026. So
Yeah.
that's
In a situation where the grid, the amount of electricity that we can generate is already pretty maxed out. So, to have Amazon, buying a data center that's tied to a nuclear plant, and to have Mark Zuckerberg come out and say, basically, this is what's going to be happening in the future, and the real what the best thing that we could do here is tie these data centers to small modular reactors where it's 24/7, and then now taking that idea out even further where, they'll be financing these small modular reactors and being able to maybe work with government to obtain subsidies and be able to, provide further electricity to meet, the general demand. It's just getting better and better and better. So, and that's going to mean even more demand for uranium than what the previous models showed. So, it's in that sense, I think that it's going to exceed my expectations.
Gotcha. Gotcha. One source of angst in the uranium investing community are the mining equities not keeping up with the spot price itself. I mean, this is a long-standing complaint, but you did see Cameco, you did see NextGen keep up with the metal and even exceed it in those cases. My question to you is, right now, this very moment in time, is it still, in your opinion, not financial advice, but is it still the time to invest in these bigger cap names, or is it possibly time to move down the risk curve and allocate money towards the medium small cap companies?
Well, that's a very good question, and I'm not sure that I have the exact answer, but I can give you my thought process around it. And the way I see it is, like you said, the equities are somewhat tied to the price of the metal itself. And in any other commodity, usually when the price of the commodity goes up, the equities in that sector go up as well, and sometimes exponentially more. So especially when you're looking at some of the explorers and high risk developers where, where the performance of the equity they can outperform the metal itself or the commodity itself. So we saw the bigger names, the like the Camecos, and some of the past producers, and the developers, the quality developers, really do well. Some of them did follow the commodity itself, and some of these names are close to their all-time highs. But let's just stay with this group of companies where the price of uranium is at the moment. The price of uranium is close to $92 right now. And I believe, and many other people believe that, and some experts and some trading houses are predicting that, the price of uranium is going to go up to $120 this year, and maybe 135 next year, and $140 next year. And I do believe that the price of uranium is going to go up. When I started in the trade, I thought that we could hit at least the high of 2007, which is $140 a pound. I think we're going to exceed that. So if that is true, then I believe that these companies in that group, the Camecos and the developers, are going to follow suit. However, the explorers have really lagged, and some of them dramatically, and which is kind of normal in these commodity cycles. The bigger money that comes into the sector, they can only invest in certain in companies that have a certain market cap. They'll invest in the companies that are better known, the blue chips, the better developers, that kind of thing. So to see those names move first, I think is normal in a commodity cycle. And I also understand that with regards to the explorers, like, people are like waiting for news on the explorers. The better names are out there drilling. They're trying to find something, and some of these companies that these explorers that have found something have been rewarded. Like Canalaska, for example, when they came out with their great drill results in January, right away they had a re-rate in their market cap, and so so people that held that stock were rewarded right away. But when the news flow doesn't follow, then interest wanes, and then people say, I'm going to wait for the next news cycle with the explorers. So, but at one point in time, when I think the generalist investor moves into the sector, and more money flows into the sector, and more interest returns to the sector, I think that these better quality, smaller name companies will benefit tremendously.
Yeah, so I think the last time I interviewed you, you were mainly in the explorers. I mean, you did have if you were kind of spread out, but you were mainly in the explorers from the last time I recall. Is that still the case now?
I haven't made any changes to my portfolio. I'm very happy with my portfolio right now. I have the majority of my portfolio is in about 10 or 11 exploration companies. Then I have two past producers in the US, and then I have two development companies in Africa.
Gotcha. What has been your biggest winners and losers within your portfolio in terms of percent gain?
Uh, well, my biggest winner is I started buying the shares at about 40 cents, and I haven't checked today, but let me just look at it very quickly. It closed the day today at where's at $4.08. So that's a tenfold. At their peak, they were at about $6 a share. So that was a 15-fold.
What
Uh,
company is this?
it's ISO Energy. And my worst performer, basically I'm flat. So where I started buying shares at about 5 cents a share, and it's gone up and it's back down, and it's trading around that same kind of price.
Gotcha. And do you mind sharing the company
No,
name?
I don't want to. I don't want to do that because at some interviews, some people ask me to share names, and they've attached me to those company names, and I just don't want to do that
Gotcha.
anymore.
Yeah, no worries. So you and I, Terry, we've been in this market for a long time. You longer than me, for sure. There's definitely a bunch of long-term listeners. But what would you tell a new uranium investor, someone who say, is looking at investing into this sector, never heard of it before? What is some advice that you would give them, given the market status at the moment?
Well, the advice is you better know what you're getting into. Do your own due diligence, do your research. And there's way, way, way more information out there than when I started. Back then, most of the information that was available was um, provided by the companies themselves on their websites, and there were some YouTube videos. And oh, I forgot to mention, when we first started, other names that were I mentioned Trader Ferg and Justin Hune and John Quakes, and those kind of people, and Andrew Weekly, but I forgot to mention Mike Alkin. Mike Alkin is the guru of the sector. He's the one that really when he started putting videos and participating at these conferences, and it was like, wow, he's just saying exactly, he was confirming everything that I was saying, but in way more in-depth research. So, and then was also Nick Hodge back then, and Gwen Preston, the resource maven. They were the people that were kind of talking about uranium back then. But anyway, so but to go back to your question, uh, do your research. The other thing is there's way more vehicles now that you can invest in uh, compared to when I started. When I started, there was no split. There was a Uranium Participation Corp, which was bought out by Sprott. But now you have Sprott Physical Uranium Trust. If you want to, invest if just in the metal itself, then you could participate in that. there's a royalty company now as well. If you want to, there's only one in this sector called Uranium Royalty Corp. There's other uranium mutual funds that didn't exist back then. There was URA, but that didn't fit my needs. But now there's HURA, there's Sprott has two, the Uranium Miners Fund and the Uranium Juniors Fund. So you could just participate that way, and it mitigates your risk. And so I think that's what I would say is look at these options. And also, you know, people like yourself that provide valuable, content on YouTube. There's so much content now that you can look at. Do that first. But I don't think that this trade is over by a long shot. Like I said, I think that the price of uranium is going to continue to rise. And as it rises, I think the equities will follow.
Yeah. So, you mentioned, keeping abreast on the various YouTube channels that cover uranium to kind of have an edge in terms of what's going on in the sector. What are some ways what are some methods and ways that you kind of use to kind of research this sector, kind of stay abreast, up to speed with this sector?
Well, when I started, what I did is, like I said, there wasn't a lot of information, watched some videos, went on the company websites, blah, 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 blah. But I also started participating in some of the conferences out there. And I think that's important as well. I should have mentioned that. So thanks for following up. But I think that's really important because I went to some conferences. So I met most of the CEOs, if not all of the CEOs of the companies that I invest in. Some of them I actually, I'll send them a text once in a while. I have actually dropped into some of their offices to check out, like, is there an actual office here more than just an address somewhere? But the other thing is, so, most of these companies will talk about, hey, you got to look at management, you got to look at the projects, you got to look at the properties, you got to look at the past, the history, the past performance, all that kind of stuff, which is true. But another thing that I think is really, really important is, does the company do, especially for the explorers, do they do what they say they're going to do? So, for example, if they're raising money, that money that they're raising, what are they doing with it? Is it going into the ground? So a lot of people don't understand what flow-through shares are. One of the companies that I'm in just announced, I think it was today, that they did a raise, and then they announced that raise had been increased. And then they talk about a flow-through in there, and a lot of people don't understand what that is. Well, a flow-through is the money that the company, the shares that are attached to flow-through, the money that they raised through flow-through shares, that money has to flow through. It has to be used to explore. It has to be, spent. It can't be spent on your salary or your expenses to travel to this and blah, blah, blah. It has to be put in the ground. So do they do what they're going to say, what they say they're going to do? So that's an important factor for me.
And any newsletters that you read in particular?
Yeah, Justin Hune's Uranium Insider is the best in the industry. It's devoted only to uranium. Justin and I have been in this for a long time, as I mentioned, and so it's the best. I really highly recommend that one. Yellow Bull has a good one. So and some of the YouTube channels like yourself, your YouTube channel are great at providing information.
Allegedly. No, I'm just kidding. Well, hey, yeah, I totally agree on Justin Hune. I've been a big reader of his for, I think, 4 years now since I got into this sector. We do have a link to his URL down below through an affiliate link. If you guys are interested, be sure to check that out. Terry, thank you so much for coming on, my friend. Any concluding thoughts before we sign off?
Well, the concluding thoughts is, and again, this is just information for newbies that want to come in, is that it's a very, very volatile sector, and it's a roller coaster ride. And even if you tell yourself, yeah, I know what I'm getting into, and I know that, listen, when you see it's great to go through the 10% days and, you know, 2021, the fall of 2021 was absolutely epic. But as much fun as going up a lot in a single day, going down for months on end is tough to go through as well. So, you know, you better be convinced. And if you're not convinced, you're going to lose money because you're going to get in at the wrong time and you're going to get out at the wrong time. So that I think those are my closing thoughts.
Gotcha. Yeah, we do have your Twitter and X handle on screen right now. We'll also have it down in the description link down below. Any other socials you want to plug?
Oh, that's it.
Excellent. Well, hey, if you guys enjoyed this content, be sure to give it a like, comment down below. Let me know what you think. If you disagree or agree with any of Terry's comments there, subscribe to the channel if you haven't already. And I will see you in the next episode. Bye, y'all.